Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends and market-moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Monday, and we'll start with the global markets. On Friday, the S&P 500 closed slightly higher by 0.2% as gains in semiconductor names kept the index afloat. The Nasdaq fell 0.03% while the Dow Jones moved up by 0.66%. US equity futures were steady in early Asian hours today. Asia Pacific markets began the first full trading week of 2026 on a stronger note after the US said it had attacked Venezuela and captured President Nicolas Maduro over the weekend. Japan's Nikkei jumped 2.3% in its first trading session of the year, while the Topix index added 1.4% to a record high. Moving on to the Indian markets, Nifty closed at 26,329 on Friday, gaining 182 points, whereas Bank Nifty ended at 60,151, up 439 points. Nifty has broken out above a symmetrical triangle with a strong bullish candle, supported by robust auto sales data, and closed at a fresh all-time high. The breakout suggests momentum remains firmly on the upside. For the day, 26,400 and 26,500 will act as immediate resistance zones. On the downside, a break below 26,300 could invite some profit booking toward 26,200 and further to Friday's low of 26,118. At the sector level, Nifty Energy was the top gainer, rising 2.2%, while Nifty FMCG was the biggest loser, slipping 1.2%. Out of the 12 sectoral indices, 11 closed in the green and only one ended in the red, reflecting broad-based positive momentum across sectors. Amongst the F&O stocks, Bosch Limited was the top performer, gaining 8.5%, as auto wholesales remained strong in December 2025 and surpassed analysts' expectations. At the other end, ITC was the worst performer, declining 3.8%. The stock extended a sharp two-day sell-off that erased about 14% of the stock's value after the Finance Ministry announced a steep increase in cigarette taxes. Global equities moved decisively into a risk-on phase. Record highs in European markets and strong December auto sales at home helped Indian benchmarks close at fresh all-time highs. FIIs were marginal net buyers at 290 crores, trimming the month-to-date outflow to 2,750 crore. However, derivatives data revealed a split in market conviction. Nifty futures jumped 165 points, but open interest fell 1.4% to 151.7 lakh shares, clearly signaling a short covering driven rally rather than fresh long creation. Bank Nifty told a very different story. It reclaimed the 60,000 mark, rising 385.4 points with a sharp 5.7% increase in open interest to 15 lakh shares. This points to a classic long build-up and strong bullish control. At the same time, speculative heat cooled. Nifty and Bank Nifty premiums eased to 127 and 190 points, indicating a moderation in aggressive positioning. The Nifty PCR slipped to 1.13 from 1.27, reflecting call-side profit booking and tactical writing, while Bank Nifty PCR held steady at 1.14, suggesting stable defensive positioning. The FII index futures long-short ratio inched up to 0.13 from 0.1, showing a mild increase in institutional exposure. Still, positioning remains skewed, with FIIs showing bullish aggression through call accumulation, while retail clients appear to be capitulating via put buying. India VIX rose 2.9% to 9.45, but remains near historic lows, highlighting persistent complacency. While the buy on dips trend remains intact, the rupee closing above 90 at 90.20 calls for close monitoring of RBI liquidity and currency interventions. On commodities, spot gold and silver ended Friday largely flat, giving up most of their early gains. Price action remained volatile as rising tensions between Saudi Arabia and the UAE, which are linked to clashes between their proxies in Yemen, kept geopolitical risks elevated and supported safe haven demand. From a technical standpoint, both metals continue to show signs of weakness. They are struggling to hold higher levels, which raises the risk of a sharp downside move in the near term. WTI crude oil futures fell around 0.5% to $56.88 per barrel. Markets remained focused on concerns of growing global supply surplus, which outweighed the impact of escalating geopolitical tensions. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.